What's going on, my friend? It's Brian Davis back again with another video. And in this video, I'm going to give you a quick portfolio overview, and we're also going to dive into some of the beginning steps when it comes to becoming an investor. Okay, if you're just getting started with investing, or you have just a little bit of experience, like you may have a 401k, you may have things like that, but you haven't, dove deep into investing into the stock market, okay, and growing your wealth. So let's dive in with taking a quick look at the portfolio. And here we're going to open up Robinhood and just take a look at how the portfolio has performed over the past weeks. Okay, so last week, as you can see, we're down 3.46%. We're up $430. Some weeks are like that. It's all good. We look at the big picture here, guys. Over the past month, the past 30 days, the beginning of 2021, we're up 324%. So that's $9,157. It's pretty crazy if you ask me. Over the past 3 months, we're up 411%, and in the whole year, 340%. So that's kind of how the portfolio is doing right now. And that's pretty much it as far as that. Didn't make any new plays. So we're going to go ahead and stop there, and we're going to talk about the steps when it comes to starting investing. So the very first step you want to take is ask yourself, what kind of investor do I want to be? Okay, so that's step number one. Now, there are a couple different types, but I'm only going to stick with two for right now. Number one is, do I want to be passive or do I want to be active? I'm going to keep it very simple. So when it comes to the passive side is, do I just want to not really learn too much about this whole investing thing, but I do want my money to grow? Or do I want to be active and become a participant in learning the vocabulary, the lingo, all the different ways you can actively invest and trade within the stock market and use that vehicle to exponentially grow your wealth at a more faster rate? Both of them are okay. Nothing wrong with either one. Each has its pros and cons. So if you want to be a passive style investor, then more than likely you're going to be setting up automatic investments into ETFs, index funds, and things of that nature, to where you don't even have to think about it. You maybe check it once every 3 months, once a quarter, just to make sure everything is looking good and your portfolio is balanced. On the other side, you have the active side, where you are actively managing your portfolio. You're maybe looking at it on a weekly, on a daily, on a monthly, but you're actively trading positions. You're actively, you're active in your portfolio and actively, continuously learning, continuously educating yourself on stock market lingo, vocabulary, and all these different things, charts, all these other aspects of the stock market. Okay, so now after you figure out what type of an investor do you want to be, next step is a crucial step, is to take a seat, look at your assets and look at your liabilities. Look at the money flow you have coming in, look at the money flow you have coming out. Okay, look at your expenses and see where you can shave off some of these expenses. Okay, look at your liabilities, as far as look at the debts that you have, your car loan, your student loan, your credit cards, your any other your cell phones that you're that you're paying off, things like that. Look at your liabilities. Okay, and now you want to kind of create a plan, and you want to ultimately get rid of your debt. That should be your primary focus, is to get rid of your debt. So as you shave off some of these expenses, you want to allocate a certain percentage towards your debt. All right. Now, where investing comes into play is you want to pay yourself first as well. So whenever I say pay yourself first, at least do 10%. All right. So if you take a whole pie, you take 10% and you pay yourself first. By that, within that 10%, you can break that up. 5% to an emergency fund, 5% to your investment fund. Okay, now you have a certain allocation to knock off your debt. You got to get rid of that thing. Because if your debt is taking up 25, 35, 45% of your income, it's going to be very challenging to build wealth. Trust me when I tell you this, okay? So, after you devise this plan of how much money is going to be allocated to where, now you have to figure out what type of account do I want to create. So, it's very simple. If you are new to investing, the very first account you want to create is a Roth IRA. That's the very first one. The reason being is because the gains that you will be accumulating in that account is tax-free gains. The way it's tax-free gains is because the money that goes in there is already taxed. Okay, so money comes from your paycheck, money comes from whatever you're earning, it's already taxed, and you put it into your Roth IRA. Everything that grows in there is tax-free. So when you turn 59 and a half, all that money that's being withdrawn, it's all tax-free. And if I'm not mistaken, I don't think it's counted as income tax. Okay? So that's what you want to do first, to create a Roth IRA account. And the max you can put in there is $6,000. So depending on how much money you earn, you really have to understand that if you can only put around $6,000 a year into your investment account, that's the only account you need to worry about. That's it. Don't worry about opening up another brokerage account, like an individual taxable one. Only focus on your Roth IRA. As you start to pay off your debt and your debt disappears, then you're going to have more cash flow coming into your pockets. Now you may be able to invest more than $6,000 per year. That's when you focus on opening up maybe another individual brokerage account and things of that nature, to where you can, then that money can really help you retire early. Okay, we're going to dive into that into more episodes. Okay, so that right there are pretty much the three most basic beginner steps when it comes to investing. Now, the next phase is to figure out, if you are an active investor like myself, I'm an active investor, figure out what type of companies you want to invest in. You really want to start with companies that companies that are within your home. Like I have an Apple iPhone here, so you may want to invest in Apple. I have a Canon phone here, or a Canon camera. You may want to invest in Canon, and things like that. So just look around with companies that you know and love, and you start with that, figuring out the different companies that you love. You can follow other YouTubers, and you can see what companies they are advising or talking about, or they're investing in. You don't want to blindly follow them, but you want to kind of, you can get an idea of different plays out there, and you can do your own research on these companies, figure out the cash flow, the balance sheet, figure out their mission, and then check out some press releases, see what they got going on, see if it aligns with your values. Okay? Now, after you figure out what type of companies you want to invest in, then it's time for you to get your feet wet a little bit. Okay? You start to deposit some money every single couple weeks, into your brokerage account, and you maybe start to buy a share of one company, two companies. Whenever you're first starting out, it's very important to not spread yourself so thin. Okay, it's very important. I highly suggest you start with only 3 companies, maybe even 2, to be honest, depending on how much money you have to start with, and build those up to nice quality positions. 100 shares. Start with getting you 5. Start with getting you 15, 25, 50, 75, and then finally you get to 100 shares. Now you have a pretty decent sized position in that company. Okay. After that, we'll go into some more advanced strategies, but for now, this is just a beginner's step-by-step guide to getting started with investing. You take these steps; these are very awesome beginner steps, and you'll be well on your way to accumulating wealth. Okay. Now, I posted some videos about compounding interest and about dollar cost averaging. I'll put that up here in the screen. You're going to want to check that out, okay? Because it shows that consistency pays in this game. Consistency pays in this game. I learned my lesson years ago when I stopped contributing to my IRAs and to my investment accounts. Trust me when I tell you that consistency pays. Keep feeding the beast. Keep adding fuel to the fire. It will get bigger and bigger and bigger over time. Trust me when I tell you this, okay? So, hopefully you got some value from this. If so, go ahead and hit that like button, hit that subscribe button to follow along with these videos. I'm going to have a certain playlist where it's going to be beginner steps to investing. I'm going to be talking about how to open up an account, how to make your first trade, all these other things, because I understand that there are new investors coming into the marketplace, and this information is vital for them to get started, okay? So, blessings. Until next time. Later.